Hello, everyone. Good morning. Buenos dias. Bon après-midi. Guten Tag. All those good things. Thanks for joining me again on another Trader Bite. It is 8 a.m. Chicago time on Tuesday, the 13th of February, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hope you can hear me nice and clearly with a good Barry White bass sound coming through. The market position right now looks like we are allocating to safety somewhat. The overnight range has collapsed somewhat. 23 points, 23 and a quarter points on the overnight range. But, you know, that is about double what we normally have. So it's still pretty high. The overnight volume in the ES is about twice what it normally is, versus 3 to 5 times. And that's where we stand. But the allocation this morning is to safety. The Japanese yen leading the pack up 1%. The euro... The Japanese market was closed yesterday. The euro's up 0.5% or 62 pips. The British pound up 45 pips. The euro bund is up 22 ticks. Gold is up this morning. The 10-year note and the 10-year bond versus settlement are both up. Everything that is index-based is down, including the dollar. Again, allocation is to safety this morning coming into the markets. So the market's been zigzagging across two key areas in the ES between 2650 or so and 2637, 38. Just back and forth, back and forth. So that's where we stand right now. As far as what we're looking for today that may impact our trading, the UK released a whole bunch of numbers. You can look those up, the CPI, PPI, RPI. Key figures for that economy there. The only thing we have in front of us is nothing. Fed Speaker Mester has already started speaking at 8 a.m. Eastern, and the calendar's is pretty clear for today. So no impact from announcements expected for today. Okay, so that's where we stand on that. As far as what we expected yesterday, let's go through our review session here. Let's move this up a little bit like that, as the French say. So yesterday, the primary scenario was for a relatively deep pullback into the prior value area. We were opening on the edge of the range of Friday, of course above value, but the expectation is we were likely to drop deep in, form a base, and then continue the Friday afternoon rally to push through to about 2665 or so, at least to tie in with the LVN from Thursday. Basically trading the value area of Thursday and stay above the value area of Friday. That didn't quite happen that way. I was bullish yesterday, as you probably note from the both scenarios. There's the second scenario. The second scenario I was pretty much right on. Pull back to about value high. Potentially push into 2618, the overnight low yesterday, and then push higher to get an impulse up. So the first move was expected to pull back. The first move was expected to be responsive, but buyers were expected to step in quite early, and then the impulse, the main impulse being up. Balancing at the overnight VPOC, remember 2645 was expected to be the initial resistance, the initial pause right there. And then we push through, and then we get to 2665 for a break, and then we continue higher towards 2670 up here. I did not anticipate a return, but overall, like I said yesterday, I'm expecting 2702 over the next couple of days. And today, with yesterday's close, today, if we do turn up, we're well within range, assuming the volatility remains the same. If not, it'll take a couple of days to get there. But overall, I'm expecting it to go higher yet again. So that was the plan yesterday. Here's how it traded. This is what actually happened. Okay, so we pushed up, became responsive. There's value high, this gray line right here. Became responsive, pulled back, right? Stopped right ahead of the close, the prior week and Friday's close for a test of the mid and the prior high and VWAP for a quick, nice quick rotation of 12 points there. That was pretty decent. And then it starts to break through, and there's the impulse. That's what that looks like. There's the impulse out of the range. We have a range extension up. We push into the 2665 area right here, and we take a pause. We take a pause for a minute, and then we start to drift up to 2671 before we start to turn back over. We have a double bottom, local double bottom at the mid in the afternoon. We shift the point of control. The point of control stays up above the prior day, above the value area, above the prior day's range, and it stays in line with the IB high. The mood is bullish going into yesterday's close. There's quite a bit of work that was done yesterday to rotate this up and hold value higher. So when we look at it on the 15, let's eliminate the noise. Actually, let's put that back. I'll kill the naked points of control because they get noisy. We have so much range that these levels that normally would be off the page are looking like noise. So this is the clean version of how the auction has proceeded. So we have 3 days of balance up here. We start to trend lower on Friday. Then Monday we come in, we test the point of control in the close, and boom, we explode downwards. Tuesday we test lower, finish stronger. We're starting to move back to the mid of this entire rotation, pull back, and then unable to hold, and then we finally get the continuation. So this is the impulse down, and this is the continuation, and now we are in the corrective, so to speak, mode, with the points of control shifting down, down, and then up. Okay, so this could look like this day back here where we start to try to go up, and we've moved price high enough that sellers start stepping in and taking it back down to the 25.54 area, I think is the key area down there. That may happen, but overall I'm expecting that we are likely to challenge yesterday's low, consolidate into Friday's point of control, hold steady, build a base, and continue higher to 2702 is the more likely play. So that's the review of yesterday. Turn everything back on. We carry that into the overnight. Okay, remember the process is always the same, day in, day out. We carry that into the overnight, and the overnight opens up right where it closes, moves down into this mid again, right? Takes it out. Doesn't take it out. It bounces off of it. So we have a double bottom there at the close, a local weak low. The market bounces back up, looking pretty strong right over the close, and then starts to rotate over. This is during the Asian session, and then the European session kicks in right here, and the Europeans come in as sellers, and we have what looks like a very weak low right now, a relatively weak low right now, with a retest to mid, and it's turning back over. So overall, the overnight session is telling us that there's less participation, 247,000 contracts versus the prior few days. See here, yesterday's overnight is at 350,000, and so on. There's less participation, there's less range. Okay, volatility is going down. But overall, the pattern here is really more likely to continue lower. So this is why I'm anticipating a push low into the lower part of yesterday's profile before it finds buyers. If it does, before it finds buyers and starts to push back up. We're currently trading at 26.42 1/4. The low is 26.36. Those 6 points could be one rotation these days. And so I'm expecting a fairly choppy session today. I'm expecting both sides to be active, but the OTF, or the highest time frame, just like yesterday, I'm expecting that to be not so active throughout the session. Maybe at the beginning, but other than that, I'm not really anticipating that it will be very busy for those guys in today's session. So it'll be trader against trader today. So make sure you're not getting emotional and chopped up. I know this chart looks noisy. I know it does, but there's a lot going on in this area here. Remember, I'm using these charts to form my bias and to see what rotations are doing and to see what the overall market is doing, right? And so this isn't what I trade off of. So I don't really, as long as I can pull, I'd like this to be a little cleaner, but as long as I can pull the overall bias from this chart, including the overall delta, and how the value areas are moving, how the overlap is taking place, basically where the market is trading, then that's all I'm interested in. I'm looking at the trigger chart for areas to find places to lean against, and then I'm looking at S5 Bookmap for where I'm going to trigger a trade. Okay, and then I look back at the trigger chart to manage that trade, that and Bookmap. So this morning we're opening right against the point of control. The MC point of control for this whole sell-off from the 5th is right here at 26.43-ish, I think. I think that's the number. Let's see, what is it? It's 26.43. We're opening right on top of it here. 26.41.50 is trading right now. The open is expected to be an open auction zigzag back and forth. I'm expecting us to challenge the overnight low. I'm expecting us to move away from yesterday's value and then consolidate. I'm looking for an impulse up. So I expect a relatively inside out day. Essentially combine these 2 days. The double distribution of these 2 days is what we're likely to trade. In fact, let me draw that on here so you can see it. Let's paint it red. Let's paint this red. Volume shading in red. Okay, and then we send it. So this is the profile I expect us to play around with. So overall, you can see how boxy this profile is, and that's why I'm expecting it to get tested. I'm expecting some tests lower before we start to push up, and then I'm looking for it to get back into the mood that it was in yesterday, and then eventually potentially push above into this 84-85 area. So that's the primary expectation. Market drifts down pretty good back and forth on the open, nice wide rotations, and then it starts to drift lower before it finds buyers. Remember, the market sells off to find buyers, right? It advertises prices down to find buyers. The overnight session is leaving us weak. Here's the overnight low. I'm expecting that to break. I'm expecting us to test below yesterday's low, close the gap, close the touch the closing price or push through the closing price of Friday, and then find buyers at that point. So that's what I'm looking for there. Alternatively, if it doesn't do that, I still expect an open auction, expect it to push higher, and then pull back in, test the other side, and then what we have again is very likely an outside in day, basically a mean reverting day, back and forth, back and forth. Again, I'm not expecting the market the OTF to be active today. I'm expecting the bigger money to be sitting aside. So that leaves us with the intermediate term and short-term traders, which means back and forth trading. That is your opponent today. Most likely is the day trader, and the intermediate term trader. Okay, so those are the two main ideas. Again, there are always 5 ideas on the day, but those are the two main ideas that we'll review tomorrow. Just remember, it's all about patience. It's all about knowing your plan, right? So you don't want to get in there and just slosh around. You'll find yourself getting emotionally involved. So it's important for you to decide ahead of time, and that's the purpose of this video, is to decide ahead of time, what am I doing in relation to what I'm expecting to see happen. I don't know what's going to happen, but I expect this to happen, and therefore I'm positioning myself. This is how I'm going to position myself, and this is what I'm going to look for. It's better to go in with a plan that doesn't play out than no plan at all. Good luck.